Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the White Rabbit Trading Channel. Let's take a look at the quarterly time frame. We are still watching to see which scenario plays out. We had these 4 possible candle formations mapped out. Of course, the candle can end up looking different, but these scenarios represent the most obvious outcomes based on the current structure. The first scenario is a quarterly SFP of the low, followed by the next quarterly candle, making the actual move higher. Personally, this is still my preferred scenario, and it is also the one I have been trading around. We had shorts from the rejection area, not from the exact high, but we still caught a nice part of the move. And now I have a long from the SFP area while we wait to see how this quarterly candle closes in roughly 2 weeks. Ideally, I would like to see something similar to this first scenario, where we get a relatively small candle body. That would clearly show the move losing momentum. And no, I do not need a momentum indicator to see that. Indicators can make things easier, but you can often see it directly on the candle itself. When a move is strong, you usually see large candle bodies. Then those bodies become smaller and smaller. Eventually, you get candles with longer wicks and smaller bodies. That tells us momentum is fading and the market is moving into a state of indecision. At lows, that can often be a form of accumulation. And once that process is complete, we would expect a reversal, potentially, during the following quarterly candle. Of course, most of the scenarios I have shown are bullish in the bigger picture because ultimately they all lead back toward the highs. And yes, that is still what I think is most likely. Could we get another wick lower? Absolutely. But overall, I still view this as a bottoming process. Price has reached a major support and resistance level on a much higher time frame. And because it is a higher time frame level, reactions take time to develop. For example, a full move up and down on a quarterly chart can take almost 3 months. So we have to give these candles enough time to form and show whether they are creating a top, a bottom, or simply a continuation pattern. With that said, let's see how this quarterly candle closes. We will come back to it next month and see whether these scenarios still make sense or if the market has given us new information. Next chart. This is our higher time frame chart where we had the major SR level marked out. This level goes all the way back to the previous bull market top and the 8-month range that followed afterwards. It is a large area, and price has now spent almost 5 months here. If you remember what was happening when price first hit this level, sentiment was extremely bearish. And of course we had just seen a major move down. But a lot of people are very emotional at market extremes. Many see Bitcoin only at the extremes of the candles and assume the move will continue forever. That's exactly what we saw in the first drop. Fear, panic, calls for lower prices, and people selling right into support. What often happens in those situations, especially when price reaches a strong support level, is that it bounces. Then what usually follows is FOMO back into the market. And now we can see the result. Price is back at the lows of the range again, finding support once more, while funding is slowly becoming negative again. That tells us there is renewed interest in shorting these prices. For me, however, this remains a support area until proven otherwise. As long as the level holds, I expect a reaction from it. Because of that, I am looking for longs from this area, both spot and leverage trades. If the level gets broken, then we simply adjust and aim for the next lower level. For this month, I am actually not expecting too much. I would prefer to see price range here and close the month around these levels, ideally as a monthly SFP. A retest is fine. Another SFP is fine. Something similar to the previous higher low would be fine as well. What I do not want to see is these levels being lost. If that happens, we adjust and move to the next step. Until then, this remains a support area. During the next month or the months after that, I would then like to see the move higher begin. Of course, there is also the possibility that price spends even more time ranging on this support before eventually moving up. A cleaner scenario would be a strong impulsive move higher. And no, I do not know which one will happen. This is a business of probabilities. For now, the probabilities favor this area holding, which is why the action was to take longs from this zone, and that is exactly what we did. Now it comes down to finding additional long opportunities, trading the current range, and keeping runners for a larger move higher or lower, depending on how the market develops. If you happen to have a short from the highs, then this is definitely an area where I would consider securing some profits. At least that is what I did. I can only tell you what I am doing, what I would do, or what I plan to do. From a structure perspective, if we see a monthly candle close back above the previous major high, then I would start aiming significantly higher. From there, we reassess and see what new information the market gives us. I have already seen people calling for a much larger range and a big ABC type scenario. Sure, that is possible. For example, if you look at 2018 through 2020, we had a lot of ranging, then another move lower, then a recovery, and then even more ranging while forming a higher low before eventually moving higher. Another possible scenario is a much sharper bull market. That would mean a fast, impulsive move up, followed by a slower and longer retracement into the next bear market. If we look at the last bull market, it was more of a stair-step structure. Range up, range up, range up. But another possibility is a rapid move higher in a short amount of time. And what happened after the previous example? The bull market effectively ended at the first major top. After that, price continued ranging with large swings, but overall it never made significant progress. Most of the moves were simply liquidity grabs inside a larger range. Because of that, I am watching both scenarios. Yes, we can continue ranging for a long time, but a fast and aggressive move higher is also possible. And honestly, that would be my preferred scenario because many people would miss the bottom, be forced to buy higher, and then have to sit through a long range afterwards. That was the real pain scenario last cycle. For now, however, the first step is simple. This support level must hold. We can also see momentum sitting near the lows. Historically, this is where many bear market lows have formed. Sure, a bottom can take time to form, but we have already spent around 5 months at these lows. Sooner or later, I expect to see the move higher. I will be wrong if price breaks below this area and starts closing below it. Now let's also check the momentum on the other time frames. 2-month momentum is still down. However, something important to keep in mind is that historically, the lows were usually already in once the 2-month momentum reached these extreme lows. You can see that on previous bottom formations. Of course, that does not mean it has to repeat this time, but it does show how lagging momentum indicators can be. Another thing worth noting is the nice SR level forming here. It is important that this current red candle does not turn into an impulsive breakdown candle. If it does, then this range would effectively break down, and we would likely see lower prices. For now, however, if the candle closes something like it currently looks, then that would be perfectly fine and would keep the important support area intact. On the monthly time frame, momentum is still sitting near the lows. It still needs a push towards 70K to cross up, but I think that number will gradually come down over the next few months. The 2-week time frame is already much more interesting. Momentum is up and remains up as long as Bitcoin closes above roughly 64.5K. At the moment, Bitcoin is trading around 2K above that level, and the candle closes in 5 days, so we will revisit it next week. The weekly time frame crossed down after the rejection. It remains down as long as this week closes below roughly 78K. For now, I would not put too much weight on it. Yes, it technically favors the bearish side, but it could just as easily support a retest or a range. We will get more useful information next week once the candle closes and new values are calculated. The 5-day time frame is more or less the same story, just with a level around 75K. For now, momentum is down while price is up, which is actually more bullish than bearish in my opinion. The longer price spends moving sideways or slightly higher without breaking down, the more momentum resets itself. The 3-day time frame is sitting near the lows, and that is exactly what we were waiting for. If you remember, I showed this previously. Whenever the 3-day time frame reaches these momentum lows, that is where I start paying attention. Yes, we can still form bullish divergence. For example, if price makes a new low while momentum makes a higher low. But the main point is that once the 3-day momentum reaches these lows, we would normally expect at least a range to form. Sometimes we get fast reversals, as you can see from previous examples, and sometimes we get longer ranges before the next move. For now, momentum has shifted up and remains up as long as Bitcoin closes this 3-day candle above roughly 60.5K. Bitcoin is currently around 6K higher, and there is still 1 day left until the close, so we will revisit that in a few days. Now let's look at the daily time frame. Daily momentum has shifted up sharply and remains bullish as long as Bitcoin stays above roughly 61K. I would say it will probably remain up for at least a few more days. The 12-hour time frame is already at the extremes. Personally, I think this move eventually ends with some sort of retracement. But keep in mind that should be judged through price action and levels, that not simply because momentum is high. Momentum can remain overextended for quite a while. So this is only one piece of the puzzle. When price starts showing weakness at resistance and momentum begins shifting down as well, then we have confluence. Until then, momentum remains strong. The 12-hour momentum stays bullish as long as Bitcoin closes above roughly 66.6K. Price is currently slightly below that level, but sooner or later, it will become difficult to maintain such elevated momentum. The 6-hour time frame is already starting to shift lower. But notice something important. The 6-hour momentum remained pinned at the highs for almost 5 days. If you blindly expected a reversal just because momentum was overextended, you would have been shorting every move up while price continued higher. The same thing can happen on the 12-hour time frame. The 4-hour chart tells a very similar story. Momentum has been at the extremes for around 5 days already. Yes, eventually, it will come down. But we need to pay attention to what price is doing. Price can simply make a shallow pullback and move sideways while momentum resets. Or momentum can start rolling over while price continues making new highs. In that case, if you traded every bearish divergence signal, you would likely get stopped out multiple times before the actual reversal happens. What I would rather see is price losing support while momentum also starts shifting down. That would provide much stronger confluence. Finally, the 1-hour time frame. Momentum bounced from the lows and remains bullish as long as Bitcoin closes above roughly 65.8K. So overall, we can see the bigger timeframes slowly moving into bottoming formations, while the midterm timeframes are already sitting at the upper extremes. And right now, the 1-hour timeframe is helping keep the move alive. For me personally, yes, I would still like to see the lows tested again sooner or later. But for now, the bigger picture remains constructive. The midterm timeframes may be stretched, but the higher timeframes are slowly beginning to shift upward. At some point, the lower and midterm timeframes can stay overextended while price continues moving higher, simply because the higher timeframes are taking control. So momentum-wise, I do not see anything particularly bearish for the bigger picture right now. Could we get a pullback on the midterm timeframes? Absolutely. But first, price needs to lose some important levels. Until then, as long as price keeps making higher highs and higher lows, momentum is mainly useful for identifying bottoms and tracking trend shifts rather than calling tops. Now let's switch to the next chart. And here I will not repeat everything because I have talked about these levels many times already. We have the production cost level, the power law level, and one level below that, which is slowly but surely rising as well, similar to the power law, just slightly lower. These are historical bottom areas based on those metrics. Of course, a metric only works until it doesn't. That's just how it is. But based on that, traders can decide where they want to put their money at risk, because that is ultimately what we do. If I see something that has worked consistently in the past, then I can manage my risk and place a bet on a similar outcome happening again. Not necessarily the exact same outcome, but something similar. And that is why, in this area, I'm looking for a bottom to form. When I combine these metrics with the larger SR level that price has reached and the quarterly time frame that I showed earlier, the overall picture makes sense to me. Something important to keep in mind is that this cycle has been different so far. Historically, price often retraced around 80%, and these levels usually aligned with those deep drawdowns. This time, however, the drawdown was only around 52%. And that is important because in the end, one side will be right and the other side will be wrong. Either this area holds, and we do not see the typical 80% drawdown, or the level breaks, and the people buying this area will be wrong. Either way, the information will be useful in the future. When Bitcoin eventually reaches similar metric-based levels during the next cycle, we will have another important data point to compare against. We also had several other indicators triggering in this region, indicators that historically only tend to appear near bear market bottom areas. That is another reason why I am looking for Bitcoin to form a bottom somewhere in this region. And that is also why I bought spot here, with the intention of holding it for a much longer period of time. Not necessarily expecting an immediate move higher, but if I believe this is a bottom area based on my analysis, then naturally I will be aiming for new highs from this region over time. That is the simplified version of it. Okay, next let's take a look at the yearly fib time chart. Here the important time areas will be next month. That's where we reach the 0.5 fib time level. After that, we have August and October. We do not know which one will end up creating the move or marking the final bottom, but what I'm looking for is the moment when price and time meet. In other words, when price reaches an important support or resistance level at the same time as one of these fib timing windows. From there, I look for a reaction or a reversal and tape short, similar to what we have been doing throughout this year and even last year. With that said, the next yearly fib time window is actually in July. That also aligns with the next quarterly open. After that, we have several fib timing windows falling within the next quarterly candle, which is one of the reasons I am looking for one of those windows to potentially form the low. Of course, it could still be a higher low. For us, the important part is the reaction from the timing window. Ideally, we identify the reaction, take a trade at the level, and ride the move either higher or lower. Right now, price has broken above the last level around 65.6K. As long as it holds above that area, I would continue aiming higher. The next major level sits around 69K. So for example, if price rallies into that level and reaches a fib timing window at the same time, that is where I would start looking for a reaction and potentially a trade. If price breaks above the level and holds, then the idea is invalidated and we simply move on to the next resistance higher. The same applies to support. For example, if price starts ranging here, loses this area, or even rallies first and then drops back into support while a timing window is being reached, that is where I would start looking for trade opportunities. Another timing event I am watching closely is the upcoming FOMC event tomorrow. What we often see around FOMC is a reversal, either shortly before the event or during the event itself. That means the move higher we are seeing now could potentially be the move that sets up a reversal. That reversal could lead to a higher low or simply a retest of the lows. Because of that, the targets need to be prepared in advance. And we also need a clear plan for taking profits at each level. The ideal scenario would still be some type of range formation. Personally, I would like to see the lows taken out, or at least the poor lows cleaned up, and then have price spend some time ranging in this area. Whether that ends up being a smaller range or a larger one does not really matter. With that said, tomorrow is the event, so let's see what we get and where the opportunities appear. For me, I have a few different strategies ready, and maybe we end up trading the news event as well. We shall see. If I do take action, I will share it in the Telegram group. Next, we have the Revin indicator. Here it is very simple and very often aligns with my overall analysis. What we have right now is that price moved lower, found support, and then had this midline acting as resistance. That means as long as price remains below the midline, we are mainly looking for either a range or lower prices. If price breaks above the level and turns it into support, then we start targeting the next level higher. For now, the short-term target sits around 73K, which is more or less the upper part of the box. The lower part of the box would be around 70K. Of course, these levels change slightly every day because the indicator itself is moving, but for now, they align very nicely with the yearly fib time and price level around 69K. Above that, we have even more confluences, but step by step. For now, what is important is observing how high price can move and whether the support level continues to hold. If support gets lost, then we can start aiming lower again. So for now, 64.5K remains the key level to watch for a daily close above or below. I also have a long from that area based on the new strategy that I'm currently testing. And interestingly, the strategy is showing the same thing. If price remains above the level, we look for higher prices. And not just look for higher prices, we actually take the trade. If price loses that level, then we look for lower prices. And again, not just look for them. We would be looking to short based on the strategy rules. I share those trades and updates in the Telegram group as well, so feel free to check them out. Or if you want to use the indicator yourself, you can use the code WHITERABBIT and get a 20% discount on Crown's website. Next, we take a look at the local range. Last time we were looking at the value area deviation fib levels that got hit and the different scenarios that could develop from there. One scenario was a retrace from the value area low followed by a retest. And another was a larger move higher into the point of control, where we also have an SR level and the trend line coming down from the highs. The first rejection I traded to the downside, and then I switched to a long. I am currently holding that trade toward these highs. I also had another attempt to add to the short when price retested the highs, but I got out because we simply did not see any weakness. Now price is reaching the point of control, which is the next area where I will be looking for a range scenario. That means a move up followed by a retrace. On that retrace, we need to see whether price gives us a lower retest or whether it actually holds the value area low as support and simply starts moving sideways for a while. If I take a trade and it starts moving in my favor, then I need to take some profits on that support level. I may also look for longs there while keeping part of the short running. It is the same thing I'm doing with my longs right now. I'm holding runners, but watching closely for weakness, taking profits on the long and at the same time looking for retracement trades. There is one scenario that is not shown on the chart. That would be price moving higher, pausing here for a while, and then pushing into the 2-day order block above, which for now is the previous range high. The trend line would also be sitting in that area. Then from there, we would look for the retrace. So yes, there are always multiple scenarios, but scenarios alone are useless if you do not have a plan and do not take action when conditions are met. As you know, I always share when I take a trade. I am not sure how much I will share in Discord, but Telegram will always get the updates. I try to post the larger moves in Discord as well, but in Telegram you get much more explanation, context, and reasoning behind the setups. That is generally more useful than simply posting a long or short signal. However, everyone is welcome, whether you are there for signals or for learning. Another thing we are watching on this chart is the monthly statistical levels. Price-wise, I already mentioned that we reached the monthly average close level. Timing-wise, we needed to wait for the average timing window to pass. And now that has happened. The average monthly low and average monthly high are effectively in place. Because of that, I do not currently expect a new monthly high or a new monthly low. That is another confluence factor, suggesting that we may enter a range. Does that work every single time? Of course not. If price makes a new high or a new low, we simply adjust. But until that happens, the averages suggest a range, and I will use that information as part of my analysis. That also fits very nicely with the scenario I have drawn on the chart. I still have a lower level marked out for a possible deviation, but that only becomes relevant if the last low gets taken. Which brings us to the next chart. The next chart follows a similar idea, but is based on FOMC statistics. I shared this one in both Discord and Telegram. Historically, if price moves into those levels around the event, we often look for a reversal. That does not always mean the exact bottom is formed there, which is why one of the scenarios is marked in red and still allows for a rejection followed by a new low. However, my first expectation is still the higher low or SFP scenario because we are sitting on support. Only if that support gets lost would I say that my idea was wrong. And yes, in that case, I would most likely lose some money on the trade. If the setup works, then the plan plays out as intended, and I continue holding toward the range highs while taking profits on the way up. The alternative scenario would be a move higher first. If that happens, then I would look at the 2-day order block for the next reaction and trade trigger. Historically, the average move after the retrace is around 20%, which would bring us back toward the range highs. That makes it a very reasonable target. However, if price moves higher without cleaning the lows first, then I really have to consider shorting it back down. You can see how this aligns with the scenarios shown on the previous charts. And if we go all the way back to the quarterly time frame, this is exactly what I try to do most of the time. Show the market from different perspectives and explain how one scenario connects to another across multiple time frames. And most importantly, I share when and how I take trades based on those scenarios, because obviously not every scenario will play out exactly as expected. Sometimes I will be right, and sometimes I will be wrong. That is why the action behind the scenario is far more important than the scenario itself. Without the execution plan, it is just a chart full of lines that does not really mean much. Okay, before I draw a few more levels on the chart, let's see what Ethereum and Solana are doing. Solana is already back inside the range. By the way, Solana gave us exactly the type of deviation below the lows that I showed in a few examples in the previous video. I was using Bitcoin as the example for a possible scenario, but in the end, Solana was the one that actually played it out. What is important now is the acceptance back into the range. Even more important would be a move that makes a new high. If that happens, then I would start aiming higher, just like on Bitcoin. And yes, if that happens, the Solana I bought up here around the range highs would finally be back in profit. For now, you can also see that it triggered a few trades, and the current target is more or less sitting at resistance. So, if you're trading this with leverage, I would at least keep an eye on that area for some profit taking. I cannot really tell you what I would do there because I am not trading Solana with leverage. I simply bought spot, and I am holding it for higher prices. Whether those targets are reached next week or next year does not really matter to me. Now, Ethereum. Here we have a slightly different situation. Ethereum made a new low and actually closed below the range. However, it is still triggering a few setups and signals that I think will eventually play out over time, assuming Ethereum does not suddenly go to zero. Of course, if you want stronger confirmation, then you would want to see price break above the previous major high. At that point, structure would clearly shift bullish. The downside is that you would already be late to part of the move. Sure, price can still move much higher afterwards, but from a structure perspective, you would need to wait much longer for confirmation. For me, personally, I would rather buy some Ethereum here than wait for price to break above 2,700. So I'm buying spot and holding it for the higher targets. No leverage. Of course, Ethereum can continue grinding lower first. That is simply the risk I have to accept. Now let's mark out the new levels and see if anything has changed. we marked out a few levels. First of all, we have the daily averages. These are the average ranges where a daily candle tends to close if it ends up bullish or bearish. Most of the time, price stays within that average range. Of course, sometimes we get larger moves that push outside of the average volatility. When that happens, it often means we are seeing an impulsive move. If the higher time frame structure is already bullish or bearish, then those moves can provide very nice confluence for continuation or potential reversal setups. For today, for example, we marked out the Monday range. The Monday candle is essentially our weekly base. From there, we look at what price does. If price stays inside the Monday range, then we generally expect the range to continue and look for scenarios such as SFPs of the range highs or lows, or deviations outside the range, followed by a reclaim. Another possibility is that a level breaks and then holds as support or resistance. If that happens outside the average range, then I usually wait for more price action and further alignment. However, when those averages line up with important levels, they become very useful confluence areas. It is important to understand that the average gain level represents where a bullish candle would statistically close on average. That means if price is already trading near that level late in the day, then I do not expect too much more upside. If that average level is also sitting at resistance, then it becomes an even stronger confluence. For today, both the Monday high and the Monday low can potentially form an SFP. On both sides, we have local highs and lows that can act as liquidity targets. How? And knowing that they sit inside the average daily range gives additional confidence when planning a trade. For example, if price comes down, then ideally I want to see an SFP of the lows, and best case, no higher time frame close below them. Because if that happens, then I would start targeting lower levels, such as the weekend lows, and below that, potentially even lower support levels. So this support area needs to hold. The same logic applies to resistance. I can look for an SFP of the Monday high, and then watch whether price loses that level again. If it does, then I can aim for the opposite side of the range. However, if price breaks above and holds, then I stop looking for weakness and start aiming higher instead. Personally, I'm not looking for a new long here. The longs were taken from the lows. Of course, if one of the strategies triggers a long setup, that is a different story. But from a discretionary trading perspective, I am mainly looking for take profit opportunities on the longs and potentially a short setup. Whether that short triggers from an SFP here, from a higher level, or from a failed move above the Monday high remains to be seen. This is now the resistance area I am interested in. I was looking for shorts before as well, but we simply never got a trigger. So this entire move up was mostly a waiting game. And now price is reaching the next area of interest. For a short, I would actually like to see the highs taken first. As you can see, we have structure stops above and then a gap behind them. That would be another confluence factor. In other words, either the business here is finished and we get a retrace, or we close above and start targeting the next level higher. The same logic applies to the SR levels on the chart. Can those highs be front run? Absolutely. Price could leave behind poor highs and liquidity for later and still move lower from here. If that happens, I simply observe the next level, and if it fails, I look to short the retest. Lower down, I start looking for new longs again. Best case below the weekend lows, but I will also watch for signals on higher low formations. And that is basically it. On the higher time frame, I am still looking for Bitcoin to form the bear market low and for a monthly SFP to develop. That means we are waiting for this monthly candle to close. After that, we get a new quarterly open where we can look for a retest or another SFP setup. On the lower time frames, I would prefer to see a range form, and that means that sooner or later this move higher should retrace. I am wrong on that idea if price simply V-shapes from here and continues higher. Until then, however, I am looking for a retrace, which means looking for a short and then another long afterwards. What I do, when I do it, and how I manage it, I will share in Telegram as always. Usually I try to catch the larger moves, but as you can see, there are plenty of attempts that only reach TP1 and some attempts that fail entirely. That is just part of trading. We keep moving forward, we keep trading, and we keep sharing the process and the trades as they happen. With that said, I wish you a nice day. and I will see you in the next one.